This week's winner, Risk. It's back on top for now, and new stocks are cheering. This week's loser, Fervo, after giving back a chunk of that lottery ticket premium.
And with reports that Anthropic's investors are eyeing a $2 trillion valuation in October, we're looking at yet another all-time record-breaking IPO. Let's get into it with this week's winners and losers.
Welcome to the IPO Winners and Losers podcast. I'm your host, Avery Marquez, Renaissance Capital's Director of Investment Strategies.
And I'm Matt Kennedy, Senior Strategist at Renaissance Capital.
Quick note before we dive in, this podcast is for informational purposes only, and nothing we discuss should be taken as investment advice or a recommendation to buy, sell, or hold any security. Past performance does not guarantee future results, and one cannot invest directly in an index. For the full disclosure, check the end of this recording.
Avery, that was
So,
very metaphysical to say that Risk is the winner. I wanted to highlight that.
yeah, I'm going a little abstract today.
Yeah.
So let's walk through the week because the calendar is nearly empty, but the IPO market is still rocking. We had the IPO index up 2.8% this week, blowing past the S&P 500, which gained 0.4%. So this is the second straight week of outperformance after last week's pretty crazy rebound.
Yeah, and that's happening in the middle of August with almost nothing pricing. The newsletter frames it right. The IPO market is dominating in the dog days of summer. Not a sentence you get to say too often.
Mhm. And the read there is the sentiment. Risk appetite is coming back, and new stocks are one high beta expression of that.
Right. This is a stark contrast from July, just a few weeks ago, when investors were fleeing, Avery fleeing from the AI infrastructure stocks. Now the industry has led the rebound, and the Renaissance IPO index is comfortably back above the S&P 500 for the year. Plenty of volatility, but the market's direction is now definitively up.
Yeah, and these returns are really going to drive the fall pipeline. A couple good weeks are great, but we need to see performance keep building. I think issuers will definitely be watching how this tape plays out as they prepare for filings.
Mhm.
And speaking of the pipeline, let's start at the top of the radar because there's a number in this newsletter that's pretty hard to get past. We had the Financial Times reported this week that Anthropic's investors are hoping for a $2 trillion valuation in an October listing. So that would be, like you said, Matt, the largest IPO of all time. Another record, bigger than SpaceX, which set that record barely 2 months ago.
Yes, 2 months. SpaceX priced at a $1.7 trillion market cap in June. We called it a generational deal, and that record could get broken before Halloween. So, Alibaba wore its crown as the biggest US IPO of all time for 12 years. And then on the global side, I know Aramco held that title for 10 years, and SpaceX just gets 2 months. Uh, or maybe a few more than that, but on a related note, I know I've said this many times, but I will be very disappointed if Anthropic just tries to squeeze every penny they can out of public investors. You're a public benefit corp. Try to benefit some public investors, will you?
Yeah, good point about the Halloween. We're getting into that, I guess, spooky season, and this is
Yeah.
potentially kind of a scary thing to encounter in the
Yeah.
public market.
Mhm.
And I think one detail here that keeps getting treated like an aside is the source of this potential valuation. I want to point to investors are hoping for because it's really doing a lot of work in this story. That's an aspiration from people who have poured a lot of money into this company. And you have to ask yourself if you trust the math they're doing to reach that kind of price tag, or if they're doing any math at all. And I will say that with SpaceX, I think we got a glimpse of what happens when the ask kind of outruns the tape.
That's fair. I think Anthropic is a different animal than most of what we've covered. I know, last we've heard 11 billion in quarterly revenue, growing 100% year over year, and an operating profit. And I think that's the distinguishing feature. The AI story has mostly been fund the build out and trust us. This one may already be generating EBIT or maybe adjusted EBIT.
Mhm. Which I think, yeah, is why the valuation conversation is at least a conversation. Though at $2 trillion, you're underwriting a decade of execution essentially on day one. And that's the same kind of framing we used for SpaceX. Probably the same framing we'll use for a lot of the names that are coming down the pike in this AI wave.
Yeah, and the newsletter doesn't count out OpenAI in Q4 either. They had news this week, which of course they did. It's an immutable law of the universe. If there's an Anthropic leak, there has to be an OpenAI leak. This one being that OpenAI is on track for annualized revenue of 40 billion, which is a strange way of putting it, on track for an annualized number. I will note that that news came out after some executive turnover too, their chief revenue officer departing. In any case, the fall could see two mega IPOs back to back. Every investment banker in New York is building a calendar around that right now.
Hmm. Yeah, and that knock-on effect, that back-to-back effect, is something that I think we really are going to be watching because mega deals soak up attention and they soak up capital, and anything mid-sized trying to price in October needs to think hard about the week that it ends up picking.
Hmm.
Though I will keep myself honest and say that we didn't see as much of a blackout around SpaceX as I thought we would, so I guess
Hmm.
there's that too.
That's true. Yeah.
Yeah. But now let's move on to the deal side because we did get a couple out the door this week, and both of them worked for the most part. We had Lundian
Hmm.
Wasan. I had to practice this before I came here
Oh,
because I'm not familiar with the name, but ticker foil, that's what I'll be using from now on. It's a
yeah.
Chinese copper foil producer we previewed last week, or you, Matt, alone. And then we had Vogenics, which another biotech metabolic diseases, and both traded pretty well.
Yeah. I will say I definitely pronounced that wrong last week. But yeah, I think the point there, both kind of light on volume, which is the asterisk here, mid-August, so not a lot of price discovery happening. Hard to extrapolate too much from these deals.
Hmm. Still, foil could be considered a mildly interesting outcome, at least given what was flagged. That sub 5% float, the pre-bought deal with indications covering more than the offering, kind of stacked against this really rough recent track record for Chinese issuers on US exchanges.
Yeah, I mean, it priced up, it traded well, held up. I think that really says that the cornerstone investors did their job. As you say, a pre-bought deal at the launch, so foil was set up specifically to avoid the kind of debut that the last Chinese offering got, DSC Holdings. Of course, a low float cuts both ways, so if those holders do sell, it gets volatile pretty quickly. And some institutions I know, just they won't buy any stock with only $2 million worth of shares trading hands on a daily basis. And that's true for the biotech this week too.
Hmm. Yeah, but Bogenics definitely was the simpler story because biotech just really keeps working, it seems. That's now 9 straight clean prints in the sector. I guess if you're counting those flat first days. But the sector has an average return of about 60%. So that's really not too shabby for a space that until recently was pretty cold.
Yeah, I mean, a company that was listed with underwriter Jones Trading, which you don't see too much, and that still got done and upsized the deal. So I think that what can get lost here is that 2026 will go down as the year of the mega IPO or maybe the year of the AI IPO. But under the covers, biotech has really been one of the most durable themes this year.
Hmm. Yeah, the Jones trading was interesting. I went
Hmm.
to I don't know, Portsmouth like a long time ago. So maybe it's not still there, but I remember walking by Jones Trading, an
Oh
office
yeah.
in Portsmouth, New Hampshire. Yes, very scenic.
Oh.
So,
Uh-huh.
so if you're still there, Jones Trading, nice office.
Uh-huh.
But then we had one deal that didn't really work this week, at least as well as the others. That was Robinhood's second closed-end fund, RVII, which had a volatile debut. Ended day one below issue, kind of climbed back, but still ended the week with a 2% loss. This one is not included in our stats, but definitely worth a mention.
Yeah, I talked about it last week a little bit as a possible workaround for retail access to these smaller private tech startups, the kind that don't really go public anymore via IPO. The rocky start is a useful reality check. You're buying a portfolio of companies whose operations you can't actually see. And unlike RVI, these are not household names. Many of them are seed stage or Series A. So I would say it is the most true to form publicly traded venture portfolio, but getting a premium to NAV right out the gate is the exception and not the rule. It didn't happen in this case. And it's kind of interesting. For now, they don't actually own the shares. RVII has agreements to buy shares via safes, simple agreement for future equities. So kind of interesting structure, but
Yeah, that's
not
unusual.
too hot right out of the gate. Yeah.
Hmm. Yeah, but definitely seeing a lot of interest in the private access. So
Mhm.
yeah, that's pretty that's interesting.
I was
Um,
asked if it was like more risky than the first one, RVI.
mhm,
On the one hand, you're getting more diversification, but on the other hand, the deals are also smaller, so some
mhm.
trade-off there.
Yeah, I think it's probably a good point of entry for those people who are really looking for like the venture venture access and
Mhm.
not just yeah like Databricks and Stripe and yeah
Exactly.
these big names. Well, now looking ahead, there's one real deal left on the August calendar. That's Lyntris, ticker LYNX. This is a defense tech roll-up targeting a $492 million raise at the midpoint. And this will likely be the last major deal until the summer lull is over.
Yeah, we flagged this one as a possible late launch, and here it is. I'd say the fact that they're going now rather than waiting 3 weeks for September tells you that they really liked what they saw on the tape.
Hmm. And two things about it. It's defense, which has been pretty streaky this year, huge early, and then investors started to scrutinize it a bit harder around midsummer. Now back to a strong rally. And it's a roll-up, which brings its own sort of questions.
Yeah, I think roll-ups require a closer look. There's integration risk, how much of the growth is acquired versus organic, and then that leverage could be a problem if it's too high.
Hmm. There is a counterpoint in its favor that it's pricing into a thin calendar. So there's no competition for attention right now. I'd say that's probably a big reason why they're squeezing in before the September pickup.
Yeah, I mean that's the trade. They're the only game in town, at least for anyone that isn't already at the beach. With one IPO on the calendar, investors can really dig into the businesses here. And then one more thing on Lyntris. This is coming from Trive Capital, which previously brought public another defense contractor, Carmen, in 2025. Carmen was, at least at one point, the best performing IPO last year. And even after a pullback, it's up like 175% from its offer price. So some investors might just buy on that alone.
Yeah, that's a pretty maybe not a robust track record, but definitely a great data point.
Right. Yeah.
And now to the scoreboard for existing new stocks. The winners and losers columns are telling almost the same story, just from two different directions. We had tech disruptors leading the gains, with CoreWeave at the top, up 16.1%. That's a pretty strong reversal. CoreWeave was at the bottom of this index a few weeks ago on the Meta Cloud headline.
Yeah, some real whiplash here. CoreWeave, I think of as being a quintessential AI infrastructure play. And we saw it get absolutely crushed in June and July, and then sentiment turns, positive earnings, and it rips right back up 70% from its July low. So pretty impressive turnaround there.
Yeah, I think that's like a prime example of like what's going on with this rebound in August. A lot of it is sentiment and a lot of it is structure. So kind of the same conclusion we came to on the drawdown.
Right. And then next gen geothermal energy play Fervo down 23.6%, the week's worst in the index. Remember, this thing was up more than 50% right out of the gate on a roughly $9 billion market cap with virtually no revenue.
Hmm. I think that's the lottery ticket dynamic doing what lottery tickets do. Pre-revenue names really are pure sentiment instruments. They lead on the way up, and now we're seeing they lead on the way down.
Right, we haven't talked about lottery tickets in a while. It's been a month or so, but I think that's the real split here. CoreWeave has revenue, contracts, an actual operating business. Fervo has PPAs and a thesis. When money comes back into AI, it's first going into the names where you can point to a P&L. This is a positive sentiment shift that is not purely about growth. Otherwise, Fervo's steeper than expected losses would have mattered. But those losses did matter on its earnings.
Hmm. Yeah. So zooming out, what does a quiet week with a strong tape actually tell us? We have two straight weeks of outperformance in probably the deadest stretch of the calendar. So that's the setup line for the fall, and it's a pretty good one.
And the July drawdown looks more and more like a sentiment episode. That correction, along with a struggling SpaceX, meant that the summer wasn't quite as active as it could have been, but the IPO machine kept humming too, and even broadened to new sectors. So there's resilience here too.
Hmm. And the Anthropic report is the headline. But
Hmm.
after our discussion today, I'm going to say hold it loosely that a $2 trillion hope in August is a long way from a $2 trillion print in October. It's like I can't even say it right. It's just making my brain spin so much.
Yeah, and to your point, a lot can change in a couple of months.
Hmm.
But even at a discounted valuation, the deal reshapes the quarter. It looked dicey a month ago. I mean, they had confidentially filed, and then after July, I was kind of like, is this thing still going to happen? But the wheels in mo are still in motion, and the second mega IPO of 2026 is looking like it's just a couple months away. And then if OpenAI comes in Q4 behind it, that's history in the making and remaking.
Yeah, there's risk here though that that same one that we keep flagging. All of this rests on AI sentiment holding, and we've now watched that sentiment swing double digits in both directions inside of a month. The AI mini cycle has been hard at work.
Which is why I'd say let's enjoy the quiet while it lasts. The next few weeks are when the fall calendar actually gets built, but we won't see it until the filings actually land. So it's a late Labor Day this year. We've got a little bit more time than usual.
Hmm. So all right, what are we watching as the summer winds all the way down? First up, Lyntris pricing. It's the last major deal of the summer, and a read on whether defense still gets a premium without really clear, uninterrupted tailwinds.
And any more details on Anthropic? The June confidential filing put the company in a quiet period, but it's kind of funny how many leaks happen anyway for these big deals. Same goes for any OpenAI noise.
Hmm. And of course, filings, which is really the whole story for the next 3 weeks. Anything that lands now tells us what September and October could look like.
All right, one more deal in the summer IP market is behind us. The fall is what we're building towards, and right now I think the setup is good enough for a tsunami of deals if we can hold at these levels.
Hmm. Well, that's it for this week's winners and losers. Get the full newsletter in your inbox by clicking the link in the description. Thanks for listening, and before we go, please listen carefully to our full disclosure. This podcast is for informational purposes only. Renaissance Capital's statements should not be considered investment advice or a recommendation to buy, sell, or hold any particular security. Certain of the statements contained may be statements of future expectations and other forward-looking statements that are based on Renaissance Capital's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements. Past performance does not guarantee future results. One cannot invest directly in an index.